All right, this video is going to go over inputting tax information into the tax software for a married couple that lives in California. This is going to be a series of videos that's going to build on top of each other. So this first one is just going to be 2 W-2s, 2 interest forms, and they take the standard deduction. So first, these are just made up tax forms. They should look pretty similar. You'll take this information, input it into tax software. I'll do an extra step that puts it into what's called like a 1040 reconciliation work paper. So here's the document so far. 50 grand for one person, 100 grand for the next person, 25 bucks in interest and 50 bucks in interest. So I look at this information and I'm going to input it into my 1040 reconciliation work paper, which is right here, 50 grand of wages, $5,000 federal taxes withheld, 50 grand of Medicare wages, 50 grand of California wages, $2,500 California taxes withheld. Same thing with the spouse. Essentially, the numbers are doubled. For the interest, 25 bucks, 50 bucks, and that's it. Schedule A is nothing because we're taking the standard deduction in this scenario, $150,000. So this should mirror the first page of the tax return. So 150. So yeah, this is what I use. You can use something similar, or you can just add it straight into the tax software. But this should help you with accuracy and completeness if you are reviewing your own work. 150 grand of W-2 wages, 75 bucks in interest, 150,075 standard deduction of 29,200 since they are married filing jointly for tax year 2024. Taxable income 120,875. I had already input this in, so it should be 16,699, and their average tax rate is 13.82. Their marginal tax bracket is 22%. I'll show you that when we input that into the tax software. We assumed, or based off the tax forms, they withheld $15,000, so they owe $1,699. So let's go into the tax software. So normally you would start off by entering their generic information, their name, birthday, social. Same here for the spouse, their address. This should be California. Then you go to the wages. So obviously I use Drake tax software. You can use whatever tax software. It should all be really similar. So as you can see, these boxes should mirror the W-2, 50 grand here, $5,000 tax withheld, $50,000 of Medicare wages. All these numbers are automatically populated. These numbers are codes that are from the W-2. Some of them will impact your taxes, some of it won't. This is D should be for 401k. I know it doesn't exactly match. There should be a variance between these two numbers, but this is more so just to show the high level stuff. W should, I believe, is HSA. Double D is employer portion of the taxes. And then down here, California, $50,000 wages, California, $2,500 California tax withheld, $550 of California state disability. Same thing for the spouse. Essentially, the numbers are just double. So that's W-2. Interest, pretty straightforward. $25, $50, and that's it. And of course up here, I'm not sure if I had mentioned this, but 2 is for married filing jointly. So now we check to see if my 1040 reconciliation matches the first page of the tax return. Basic information, 150 grand, 75 bucks in interest, 29.2 in standard deduction, taxable income 120,875, 16,699, which we had $15,000 of taxes withheld, so they should owe $1,699. So we'll check California. California should start with the same amount, $150,000, $75. California does not let you take a deduction for HSA, which is that W, so they add back that 4150 times 2, which is 8,300. California AGI is 158,375. We'll take the California standard deduction, which is different from the federal standard deduction. Taxable income is 147,295. Tax is 6,783. The exemption credits is 149 times 2. There's 2 people. And therefore, the net tax owed is $6,485. We assume $7,500 of California taxes were withheld. This is if you don't have health insurance for the entire year. So this is just a penalty. If they did have health insurance for the entire year, this would just be 0. So assume they don't have health insurance. This is a penalty. Their tax balance, when you add everything up, is that they owe $1,831. And of course, if they didn't have that penalty, they would get a refund. So everybody's situation is different. So if we go back to here, it matches. So they owe $1,831. And of course, like I said, if they don't have the penalty, they would get back $1,015. But we're going to assume that they don't have health insurance. And then I also did this for Arizona, starting off with $150,075. Arizona takes a standard deduction that matches federal. Arizona taxes are 2.5% at $3,022. We just assume that in this scenario, they didn't withhold any taxes. This was just an extra state I just want to put in to show other people, since it's another state that I work with. So they would owe the full amount of the $3,022. So that is the first video. Married couple living in California taking the standard deduction. Let me know if you have any questions. The next video is going to go over if they have itemized deductions.